Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and we are going to talk about the increasing mortgage rates in Seattle and across the US. This is my handy cheat sheet, and we're going to be looking at the Freddie Mac primary mortgage market survey, and they do this every single week and survey mortgage prices across the country. Just note that we're looking at data from February 25th, 2021 as we head through the rest of this video. One immediate observation that we can make as we look at this week's study is that mortgage rates have been increasing very dramatically over the past few weeks and have been on the rise since the beginning of 2021. As we look back at the beginning of the year, January 7th, the first survey of the year, we had interest rates coming in at 2.65% on average for a 30-year fixed rate mortgage. And that would have been the lowest rate they've had for a 30-year fixed mortgage on this survey, dating back to infinity since they started doing these. So super low rates, right? And they've been really low for most of 2020, especially the second half of 2020. But since then, rates have jumped up, and over the past few weeks, most dramatically. And as we look at this week's survey, we have rates coming in at 2.97% on average for a 30-year fixed rate mortgage. And again, that's a 0.32% jump in rates, and that can definitely impact somebody's affordability. And I'll say not super dramatically. If you were on the edge maybe of being able to afford the house you want, it would impact it, right? But I don't think there's too dramatic of an impact yet. But if this trend continues and mortgage rates continue to climb as the economy starts improving and as people start moving money maybe out of stocks and into bonds, there's so many different moving parts. But what could happen is that in markets like Seattle or more expensive markets, the increase in interest rates is going to be a factor. It's going to impact prices, or at least impact some people's availability to purchase. Overall, since last year in February, mortgage rates are up about 0.5% since the same time last year. And rates had already started going down before the pandemic started, but that decline was accelerated when COVID-19 came on the scene. And if we look back, even last year at March, so in March we saw rates at 3.65%, and they started dropping. And I refinanced my mortgage, so timeline here, at 3.25%, which was the lowest rate we'd ever seen at that time for a 30-year fixed rate mortgage without buying down the rate with points and things like that. And then I wish I would have waited because we saw rates continue to decline, and I probably would have ended up with a rate a lot closer to that 2.5% rate. At this point, not worth refinancing, especially now as rates have started to jump up again. I'm happy with 3.25%. But some buyers got really, really lucky and fortunate to get a rate in the low to mid twos over the past few months. And I think that that's going to be changing here as we continue on in 2021. A couple applications here as we wrap up this video. Number one, if you're a home buyer, rates are still super, super low. So don't get discouraged when you see a rate right around 3%. My parents tell me stories about buying their first house at like a 13% interest rate. So interest rates are super, super low right now. And even when I bought the house I'm in right now, we had a 4.25% interest rate, which was super low at the time. So we've seen rates continue to go down over the past few years, and they're super low. And 3% is a great interest rate. Now, it's not as good as it could have been in the past few months, but rates have been climbing and they're still in a really, really great spot. So if you're a home buyer, don't be discouraged by the increase in rates, but do be aware that rates could continue to climb here in 2021 as the economy improves, because nobody wants to lend money at that low of a rate. The only reason they're doing that is because they needed to. A second application here for sellers, and there could be a slash here for buyers. I think if rates continue climbing, things will cool off a little bit. So there is a lot of pent-up buyer demand, and there are a lot of people that won't be impacted dramatically if rates climb a little bit, but we should keep an eye on it. And so right now, if you're somebody thinking about selling, it's still a prime time to be getting your house on the market. I made a video about a month ago about how this spring might be the best time ever to sell your house in the Seattle area, and I still stand by that. As of now, we haven't had a better time. Now, Who knows what these next few years hold? Maybe prices keep climbing, maybe prices dip off. I'm not going to speculate, but at this point, if you're somebody that's moving out of the area or thinking about downsizing, it could be a great time to get your house on the market. Thanks so much for watching this video as we talk about mortgage rates increasing and how it might impact the Seattle housing market. If you have questions about your situation, please don't hesitate to reach out. And if this video brought value to you, please consider subscribing to my channel so you can see more of the content that we put out on a regular basis.